All right. Good morning, good afternoon again from wherever you're joining from. You're welcome to the Dukia Wealth Management Seminar for December 2025. Compliments of the season, and we wish you a Merry Christmas and a prosperous New Year. Thank you everyone for being a part of the Dukia Group team, from attending all our seminars from the month of January down to the month of December. Thank you for staying with us, all your information, your purchases, your feedback, your calls, and just being a part of the growth and the development of Dukia Gold. This is actually the last webinar for the year of 2025. And we are just going to give you a little bit of context onto how God has did this year and what you should look out for the next coming year. Wishing you a prosperous Christmas. And as I said earlier, you can invite your friends and family using the link directly from the chat. Okay, what are we going to be talking about this December? We are going to be talking about gold, money, crypto, and the new financial order, investing for stability in 2026 and beyond. So you're going to look into the perspective of how we can invest for stability in the year 2026 and how we can best hedge our assets against the coming year, how you can better prepare, define, and protect yourselves and your friends and family against the coming year. All right. As you all know, most of the statements are going to be forward-looking, and the best approach you should actually take is consult your investment advisor before making an investment decision. Although the statements here are backed up by facts and figures on how gold has performed this year and how gold is going to perform the coming years, this is to actually give you perspective that you should consult your investment advisor before you make an investment decision. As you all know, we are headed by a team, starting from the chairman, Mr. Tunde Fabemi, to the managing director, Madam Buster Olabi, to the chief operating officer, Mr. Paul Beasley, and all the other members of the team that made this year's webinar success. Thank you so much for being a part of this conversation. Now, what are we going to talk about? We're going to give you a detailed perspective on gold, money, and crypto and the new financial order. We're going to now talk about what has fundamentally changed in the medium of exchange around the world, giving you a key message of we are not in a cycle, but in a transition, how debt and fiscal dominance has dominated the world throughout this year, taking the example of the recent wars that happened, and how sanction has reshaped capital flows across different markets. And most importantly, we're going to talk about how trust in money has become conditional, not assumed. How you can no longer depend on fiat currency to best hedge your inflation, bringing us down to money under pressure, and how money, fiat currency to be precise, remains an important medium of exchange, but it's no longer sufficient as a store of value, and how cash excels at transactions, talking about inflation, currency risk, and the basis of gold as a stable investment asset class. Also, we are going to dig deeper on why every Nigerian must own gold today as part of their stability efforts in the forthcoming year, and how gold is better hedged against inflation and better safe haven assets as against fiat currency and cryptocurrency. And I'm going to talk about investing for stability, what portfolios must differently, what you must do differently, and how you should shift from return maximization to risk management and diversify from non-financial asset classes. Then we are going to conclude, take questions, and get the ball rolling. So to begin the welcome address, I will invite the managing director, Madam Buster Olabi, to actually take us through the welcome address. MD Ma, you have the floor.
Good morning, everyone, and it's my pleasure to welcome you to this month's session, which also happens to be the last in the series for the year. And we'd like to appreciate you all for being with us, for your support, and for believing in us. And this means a lot to us, and it's because of your support that we're still here, and that your support has kept us going. So we say a big thank you, and would like to wish you the best compliments of the season. We wish you all a very Merry Christmas and a wonderful year 2026 ahead. So today we'll just try to um, have a kind of summary look at what has happened. I believe that what we've done so far, gold has held its weight. It's held true all through the year, just as it has over the decades. And we believe that we've done it right, and what we've preached has held true. We've seen various things happen on a positive note in terms of how gold has performed. And Emmanuel today will be taking us through this. And we would like you to stay tuned, and any questions will be taken at the end of his presentation. We thank you all. It's a good customers, our friends, our colleagues for staying through. And all thanks also to Almighty God who has kept us all till today. And we know that He will continue to do this for us. Thank you, everyone. And I wish you well, and wish you a very insightful session, and looking forward to talking to you at the end. The chairman will also have a speech. I believe is Emmanuel, is it now at the end?
Yes, ma, it's supposed to be
Which
after your address.
Okay. Thank you, everyone. Chairman, over to you.
Okay, thank you very much, ma. May I invite the chairman of Dukia Gold, Mr. Tony Fabemi, to give his opening speech.
Thank you, everyone, and once again, Merry Christmas and a Happy New Year. It looks like yesterday, but we've been together for 365 days since we made the last December presentation to you and predictions. You will recall that when we last met, the world was still in a lot of cycles. We were getting to see the effect of the many pronouncements out of America doing very unilateral things with tariff. We were also looking at many issues surrounding safety and security around the world, including the escalation or de-escalation of the war in Ukraine. We were also basically looking at the many issues surrounding commodities and how commodities will unravel for the year. Three things, excuse me. Three things have happened. The war in Europe has not subsided. In fact, it's gotten more complex. The many pronouncements of Donald Trump has finally unraveled. Even Nigeria has been hit. People who had visas and who had stays and permits to travel anywhere around the world now need to check whether or not truly the visa they have, including the residence they think they have, truly makes sense. And so the state of uncertainty in many people and in many conditions and in many old events has since unraveled. And I think it's going to get worse. Um, the unilateral battle which Trump caused on the so-called economy of the world has finally come back to roost. By this time next month, everybody would need to submit the year-end account, and you will see the effect of how much profit or loss was made, and the effect of tariff either at home or abroad in the quantity of goods you could ship, or perhaps in the value of the goods, including the price at which you are able to sell the goods. One thing is certain, everybody is consuming less because everybody has seen that it's time to button up. One good thing is that the world has also been told to prepare for war, whether it's economic or physical. But we know now that even America just simply said to us, you see the largest investment in armament, I'm going to undertake it. They've undertaken a commitment to build some brand new ships. Whether or not those ships will be built on time or in time or within budget is another story. But all of this means prepare for war. But like they say, when you prepare for war, hopefully you would also prepare for peace. It's called mutually assured destruction. Even Nigeria has been threatened by the same set of people, and I'm happy that our government is reacting appropriately. So let's hope that as we all prepare for war, that God in His mercies will give us all peace, and the peace that will truly last and allow us all to trade properly. So much for what I call uncertainty. The world has never been more uncertain since the 1940s, all through 1947. Today, we don't know whether or not um, the many OPEC meetings will hold the way we know, or perhaps when they hold, the price of crude would remain the same. Venezuela is being blocked. Ships going in and out of Venezuela are being taught a lesson. One day, I pray it doesn't come to an old themselves are showing the strength of their 1.5 million people, and their and well-being of mankind, but they are on sea and in the air. What is important is that what we used to think could not come out of China is coming out of China now. They are able to export auto vehicles, any automobile maker from across the world. And in every way, it seems to be the balance of payment is shifting would also shift away from the dollar, perhaps to third-party currency. Is the fact that UN factors that is what's going to happen. Gold will remain very strong in the balance sheet and the books of the central banks across the world. Again, central banks are expected to remain the largest buyer of gold over the next 24 to 36 months. So we don't expect the demand for gold to go down. The fact also that most pension funds around the world have been told all of the monies which are essential for the future stability of pension funds should go largely into gold. Most are recommending 15 to 25%. And also, finally, the likes of JP Morgan and the likes of HSBC, everyone is finally advising portfolio owners, managers, wealth providers to park a lot of their money also in the precious metal called gold. Perhaps of the four things I would like to mention most, Mr. Emmanuel, if you can call up the graphs now, please, is to share with you four major graphs. And those graphs, to me, tell the story of what the future looks like for all of us. This time last year, we advised everyone to desist from parking their money in dollar. And I would like the dollar first. For those who heeded what we said, if you parked your money in dollar, what has happened is very clear. The dollar, in terms of its value against itself and against every currency, basically has declined. A good example is if you parked your money in dollar at 1,500, even in Nigeria, you would only get 1,400 back. So basically, the dollar has weakened materially. We think, given the effect of what we are seeing, the dollar will weaken even more. So it's like you saying, I will park my money in a Rolls Royce, but it's open roof, or I'll park it in a Ferrari, it's open roof, and you choose because you don't have a garage to leave it in the sun. Of course, the skin of the car is well painted, it's been protected. The seats are also well protected, in fact, greased with aloe vera and maybe a lot of shea butter so that it looks very supple and nice. It's Italian leather. But yes, it's also been protected against moisture. But the moisture that was envisaged is your sweat, maybe spills of coffees and water when you are driving, not a rainfall. So if it then rains, one thing is certain. For every rain that occurs, not only will this spoil the skin of the leather on your seat, it may actually ruin your so-called electrical system. Such is cash in the hands of anybody right now. If you don't take time to basically run your assets in a manner that is consistent with your situation, you will have a situation on your hand that we will be very, 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 very sorrowful if you don't take your time in managing your asset properly. So I would like to beg all of us, wealth, which unfortunately they tell us to store in buildings and or cash and cash items, will not be as easy as we used to think if we don't get ourselves the right mix of where to keep the cash. And I repeat it again, please remember now to keep your cash only in the very best assets that you can find, because failure to do so will mean, of course, that you will have a situation where your asset, which will be a Rolls Royce this time, has been left in the rain. And if you then offer it to anyone, it will simply just read the following: I'm not available at the value that you thought it will come out as. So that's the first challenge that we've got. The second challenge that I would then say is this: the dollar will continue as weakened, it shall continue to weaken as we see it. And I'll just take a second off to adjust my microphone. So basically, what will happen is a very simple problem. Um, for cash, if you keep keeping it in a currency like dollar, please be careful. It may further decline or further and as it declines and the says he's packing his money or keeping his cash in a manner that it common sense right now. Again, some new kid on the block came out as crypto and of course sucked in a lot of people. And what crypto, especially Bitcoin, did was take everybody on what they call a wild goose chase. We've said it, we will say it again. Crypto has no fallback position. It's a fiat currency of a very strange nature. It's privately held. It has no fixed asset. All that they have promised you is that they will generate a limited quantity of it and that they will manage and attract other people to take you out as at when you need to be taken out, which again is strange. We've seen it come from less than $25,000 to as high as $100,000, but we've seen it also cool down from $100,000 to $82,000. And the truth be told, as soon and as long as the American economy continues to behave the way it's behaving, we don't think, in our opinion, that there will be a major resuscitation or readdress of the same problem that we think is going to continue to affect cryptocurrencies. The only convenience they've got is that a lot of hard boys, if you are not a cowboy and you worked hard for your money and you tend to have a fallback position in your retirement, don't forget, don't park your Rolls Royce uh, in uh, in the sun, and don't also park it in the rain. Find a safe place to put your Rolls Royce or Ferrari. You don't want to drive it only when it's new. You want to show your grandchildren that you are smart enough to buy a car that, if they choose to resell in their old age, would actually fetch them additional income. But if that Rolls Royce is destroyed, you'll be sorry that the amount of money that you will lose keeping it in your garage can be far more embarrassing than, in fact, the amount you bought it for. So I would still recommend to everybody, please avoid Bitcoin if you can. But if you are so tech savvy that you want to have it, for entered, there's double trouble. If you buy houses that are also not well documented, you can hold it for a day and the person comes with a little X sign, and 3 hours later, one bulldozer shows up and wipes it out. So while we recommend houses, yes, we will say to you, be kind enough to surely know that the documentation for your house is 100% good and is defensible both in law and in land and house planning, and that everything around that house is good. It's also much more difficult now. You can buy a house in Ikoyi and think it's your residential apartment, or buy a house in Bagada and think it's a residential apartment, and then a major industry suddenly shows up in front of you, threatening the value of your house. So while we also still recommend houses, we say to everybody, the nature of the evolution of housing in Nigeria is quite suspect. and therefore we would say buy houses with caution. Um, I'll therefore return to gold, which for us is the more important asset that we see, having compared all of it. What we have noticed is that gold has performed exactly as we predicted over the last 12 months, over the last 24 months, over the last 36 months since we started. And we think it will continue in that trajectory. Like every good thing, of course, it will have its good days and poor days, but certainly not one that would wipe you out. Gold is not for precautionary savings. Gold can never compete with cash or Bitcoin as a precautionary motive. Gold is like a Rolls Royce. It's not a car you drive to work every day. It's a car that you need to put in front of your house to show that you truly have status and wealth. Gold behaves house. If you have 5 ounces or 5 bars of gold, a kg, it will probably buy you a house anywhere in the world. So rather than you going to worry yourself about a house that you are not certain of its documentation, we would recommend buy gold, and you'll be glad you did. Everyone who bought gold last year, when we said please buy gold, can attest to the fact that the value of gold has come from around $2,800, $3,000 to $4,400 today. Whether you bought it when the naira was 1,500 or 1,400, the 68% increase on the average has meant that the better return on your asset employed and you have a better staying power for your currency. Now, what do we see coming in the new year? What we see coming in the new year are two. We think the value of gold will reach around $6,000, but certainly it will go over $5,000. How soon will depend on the reports that come out from America, especially when those who need to have their year-end report for sales of goods and services truly show the 1 year effect of tariff and then non-tariff issues around the US. We also think that if they don't settle the European war amicably and the world enters into an arms race and the world needs to basically defend each country rather than countries coming together under joint safety and security arrangements, there's going to be unnecessary demand for gold. And why? No satellite will go into orbit. No extremely expensive communication device, including your mobile phones or TV, will be made without gold inside. Therefore, there will be a very elevated demand for industrial gold, apart from jewelry. That's good news for all of us. And if that happens, I think gold will go surely over 5,000 and will be much more elevated towards the $6,000 mark. The last one, which I need to mention just by chance, is that gold, again, is being mirrored by a sister asset, which is silver. And as you know, silver is extensively used today in solar power, solar panels, and quite a lot of industrial and household application. To the extent that everybody now needs to go back to made in America and not necessarily made in China, and go back to made in Britain and not necessarily made in America, or go back to made in Germany. People who used to pool resources to go and mass manufacture out of China are beginning to ramp up on critical mineral in their own country to hold their own vault. Almighty Canada, who thought he had gold under its soil and never kept physical gold as part of his CBN reserve, has finally shifted position. They themselves also know they've got to get Royal Canadian Mint to make gold that will go into the hands of the government of Canada. All of this only mean one thing. There's a limited production of gold, and whatever is produced has gone. It's not going to be replenished. It's not like a Greek that says plant one tree today, harvest it tomorrow, another one can go day after. Whatever gold you take out of the ground and make into a bar of gold is not coming back. It can only be recycled. So we continue to believe that there will be limited supply, but there may be, and there is every fact that there would be excess demand. And as long as there is a lot of money and people chasing the same commodity, the earlier you get your own, store it and keep it, the better for you. And people always ask, when is the best time to start buying gold? I say it's today. And how is the best time to buy gold? Is to buy it every day if you can afford it in little tranches. This way, you take advantage of good days and low days and high days and no days, and you then have an averaging cost of holding your stock. And this hopefully makes you very comfortable when they say what is the total price of your gold is an average cost of acquiring. But what is most important is when you acquire, please remember, it's not a short-term asset, it's a long-term asset. If you were to compare it, know that your best comparison is to keep it for 2, 3, 5 years and try and keep it for your retirement. Try and keep it as part of what you want to spend in your old age or what you want to use to defend your wealth when you retire out of service. It's not what you buy today and decide that tomorrow I think it has gone up, let me quickly sell it. No, it's still and will forever remain a long-term asset. It's been used in the time before Christ. It has been used since the Christ. It was also, and it will also continue to reign and be used after the death of our Lord and Savior Jesus Christ. It's a good season that Jesus is coming again, and we are celebrating him and his birth around this season. It's the 24th of December, 25th is Christmas. I want to wish you a very Merry Christmas. That even the wise men were very, very wise indeed. One of the key gifts they gave to Jesus Christ himself is gold. And therefore, we will recommend that if you are trying to buy a hamper or two, please remember to send your loved ones a gift of gold. As I announced last workshop, anyone who has a gold holding with us, we all know ourselves, most of us are here. Of course, there are thousands and thousands of people, they don't all show up at this workshop, but they will get what they call an alert on their wallet. By the grace of God, things will show up and things will show up very well for all of us in the new year. So I want to congratulate all persons who have been gold investors. It's been a wonderful year. I believe that it will be a much more wonderful future together in 2026. When we conclude, I would also speak to you about progress being made at our mine development site. We have good news. We would have our first gold pour in the first quarter next year, definitely. Equipment are on their way, manufactured, designed, installed, and all the rest of them. We're recruiting also staff, and we're training, and we're doing quite a lot of other things. So I will make some additional announcements at the end of Emmanuel's workshop. Just to quickly round up, I return the microphone to Emmanuel, who will be more detailed in showing you what has happened to money, why you should please, please, please learn to store your wealth in a currency and or mode of storage that makes sense. You can't store your money in crude oil. It's too liquid, it's too voluminous to carry around. You can't store your money in bushels of wheat. It's a challenge, and they all call that commodity. If you store it in dollar, be careful. The dollar itself is weakening. If you store it again in Bitcoin, is too choppy, is too temperamental for us to recommend. We think you should consider gold as part of your storage portfolio. Of course, we're not saying don't store in shares and bonds. We're also not saying don't store in houses, but be moderate, be informed, be educated, talk to your investment advisor, and talk to your financial analyst. I'm certain that they'll do a better job than we do. I therefore say to everyone again, Merry Christmas, and thank you all for your good patronage. I wish us all the very best in the new year and a very, very joyful Christmas. Joy to the world. Merry Christmas. Over to you, Emmanuel.
Thank you very much, sir, for that opening speech. And as the chairman rightly said, he has laid the perspective of the defense currencies from gold to fiat currency down to cryptocurrency. But I'll just give you more context as to what he just said. But currently, what is happening right now is not just another bad economy that is going to change in a few years. And the times that we live in are way, way different from the times of our parents and our future parents and our grandparents, I mean. People could actually wait out economic disasters and definitely get a good economy later on. But currently, with the cycles that we are seeing right now, government is spending far more than ever. The debt is currently piling up. Nigeria is planning to borrow another 17.54 trillion naira for 2026 budget. Politics is affecting the way the market conditions are. Technology is changing how money works. That means, all this means is that the ideology that things will actually go back to normal is not going to apply in this 21st century. Instead of waiting for stability to actually occur, people have now devised means to actually create stability for themselves. And that's why you hear the concept of investing and saving at a young age is now way more important than ever, because the economic cycles that we are perceiving, that we are currently involved in, have rewritten the new rules of money. Definitely, one of the biggest economic cycles was public debt. In June 2025, Nigeria's public debt reached over 152.39 trillion naira, according to the Debt Management Office. This was an increase from 149.3 trillion naira in Q1 2025. If you listen to the president's speech on the 2026 budget, you should know that the federal government is planning to now borrow another 17.89 trillion naira to fund the budget increase of 2026. And if you look at all this increase of budget, and the whole debt that is actually increasing, you should either ask yourself that, what does the increase in budget do? Now, the increase in debt by the government, because of the enormous debt that they are planning to fund all the other accessibilities, they can't actually increase interest rates or cut spending without causing too many problems. Now, if they increase interest rates based on this debt so that they will actually now begin to pay more on the debt, you know that if you increase interest rates, borrowing will now reduce. Public institutional investors will not be able to borrow money from the government to actually fund infrastructural projects. And if they say, okay, because of the too much spend, let us just reduce our spending. And the problem with reducing spending for the government is that if the government reduces its spending, it's going to affect every sector of the economy. Like, you can go to the hospital and say, okay, if 1, 2, 3 drugs were covered by insurance, you could see only one of those drugs covered by insurance. You have to pay out of pocket. So to curb this debt, what do? The government now legally creates new money by buying up federal government bonds, according to the Central Bank of Nigeria. They print new money or quietly allow inflation to reduce the real value of what they actually owe. So if the government now begins to print new money legally, they begin to now create where so much excess cash is now chasing too few goods and services, giving rise to inflation. Now, when more money is created over time, the money you actually have now becomes worth less than its actual value. So if you see governments increasing their debt, you should definitely know that the real value of your money that you have in your bank account is going to reduce. So this is one of the main reasons that prices are definitely increasing, even though the government is creating other efforts to reduce it. So the value of the debt, according to this cycle, means that your money, whether you like it or not, whether you are interested in what the government is doing about its public debt, is definitely reducing value consistently. As you sleep and wake up, the value of your money in your bank account has reduced, whether you like it or not. The second major reason that influences the cycles we live in is politics. Now, in previous days, money can freely flow around the world, but today's age, you know that countries can block payments, they can freeze accounts, they can impose sanctions, they can restrict access to global systems, like what they did in Russia and many other countries for experiencing this was. A nation can impose a sanction on another nation, whereby the financial system in which that nation works will be totally freezed. Now, this has now made governments and investors begin to rethink how they hold their wealth. They did it against Russia. You should see from this chart that based on the Russia-Ukraine war, you could see several other companies like Total Energies, Google, Meta, ExxonMobil, even McDonald's began to restrict and place sanctions on Russia. Definitely, they freeze most of the Russian investors' bank accounts in the US, and definitely their financial systems began to crash. So assets that now depend on permission or platforms or political goodwill are now seen as way riskier than normal. As a result, people are looking for things that do not depend on any government's approval. And one of those reasons they are looking for is actually gold, because for every dollar, or let's say you're buying yen or euro, pound sterling, whatever one that you want to buy, it's now dependent on political goodwill and permission for you to transact around the world. So it now makes it way riskier than assets that do not depend on these platforms. Now, as you examine the relationship between inflation, gold, naira depreciation, and gold, what becomes evident is not a speculative correlation, but a structural one. That gold does not respond to inflation levels. It responds to inflation uncertainty, real interest rates, and confidence in monetary policy. Now, when inflation is consistently eroding the purchasing power of your assets, gold preserves value precisely because it sits outside of the domestic policy framework. It does not require a counterparty to prove its authenticity, and it's not requiring the political goodwill of two collaborating nations for it to actually gain its value. So gold performance reflects a simple reality that because it is globally priced, it therefore hedges against the naira devaluation in Nigeria. So this means that one of the key assets you can use to diversify against inflation, one of the key assets you can use to diversify against inflation, currency devaluation, and all other asset classes is actually gold. Now, trust in money has become conditional, not assumed. Perhaps the most consequential shift is really psychological, that the trust you had in your fiat currency when our parents believed that, oh, all you needed to do was to graduate from school, you get a well-paying job, then they pay you a salary, a stipend, and you'll be able to take care of your family. That era, that notion has actually predictably changed. Now, because of inflation rates, because of debt cycles, because of geopolitics, users of fiat currency have now begin to question their true source of their value. The money, the naira you keep in your wallet, in your bank account, has now definitely begin to lose value because all these cycles from debt to political goodwill have begun to influence and depreciate the value of your money. Today, people are no longer asking questions that, oh, the fiat currency you have in your hand will actually hold value. But real questions like, will inflation wipe out my savings? Will this currency be strong in 10 years? Will policy decisions change the rules overnight? These are now questions people are beginning to ask themselves because definitely the new rules have been written. And I'll give far more perspective to why the fiat currency, or just fondly call your naira, USD, euro, pound sterling, or yen, it's actually unstable. Now, nobody's refuting the value of money. Money remains a valuable tool for economic activity. It helps to enable liquidity, it facilitates trades. You can't go to your favorite commercial bank and just withdraw calories from the bank account. It's actually cash they will give you. So its role as a medium of exchange is very critical. But what we are trying to show you is that its role as a store of value is now extinct. So an asset can be excellent for transactions, but definitely not going to be used as a tool for preservation. Fiat currency, like the Nigerian naira, is serving a formal role by facilitating trade and anchoring as account systems. But when you are using it and say, okay, because I have 10 million naira in an account, I'm way richer than I was 10 years ago, that rule has changed because Government policies have now begun to undermine the value of your assets. Cash is determined from currency, and currency is another root word for current, meaning that it's supposed to move. So every currency you have in your account that you're using as a store of value is actually, in the best case scenario, way less than you actually think it is. So if prices double in 10 years and your savings don't, you're effectively poorer, even if the number in your account is higher. If the prices are doubling every Christmas, like if you check around transport rates as this December season, people are moving all around the country to visit friends and family, you can see that transport rates are way, way expensive. If your savings is not actually growing up to reflect that, you are way, way poorer than you were last year. So inflation and currency devaluation are actually now changing the value of your money in real time. So this is why people are now working harder, but actually are getting nowhere. Exchange rates change, policies change, interest rate change, government policies. Future of money is now unpredictable, and planning has become way more difficult than ever. So if the money you save today can't be trusted tomorrow, you need something to help you balance out that risk. And that assets that you can use to balance out the risks of currency devaluation and inflation speculation is actually gold. Because gold is not just a speculative bet against your naira devaluation. It's a rational response. It's a good thinking response to the economic uncertainty that is prevailing in the Nigerian environment. It protects against inflation, acts as a hedge against currency depreciation, and exists outside domestic policy discretion. It's not bound to a government to prove its authenticity with a pen and a paper. Like every naira note you print, you need the CBN governor to actually sign on it and make sure that this naira is actually valuable and used for a medium of exchange. But no, gold doesn't rely on external banking systems or capital controls. It doesn't rely on liquidity cycles like your famous crypto. It's globally recognized, politically neutral, and historically resilient. For navigating an economy where your savings have begun to erode, gold functions as a financial hedge, not to replace money, but to stabilize it. In the new financial order, ownership of gold is less about fear and more about foresight. The new rules, the old rules were to actually diversify in stocks and bonds, but the new rules are to actually keep a considerable amount of your money, 15%, in safe haven gold, in commodities, and leave all that speculative assets down the road. You can still invest in bonds, you can still invest in real estate, you can still invest in other stocks of your choice, but you should definitely be positioning yourself to actually invest in gold as part of your diversification strategy. Now, I'm going to talk about the difference between cash, money, and crypto, which our chairman has actually explained previously in his opening speech. Money is the backbone of daily life, designed to move quickly, not to sit still for decades. You use money to pay for food, for rent, you can gift it, you can use it for school fees, you can use it to do subscription, you can use it for emergencies. One of the biggest tools of money is actually convenience and acceptance, because everybody will actually take it as a use for an exchange of goods and services. But the weakness of money is that it loses its value over time. I've mentioned this consistently throughout the course of this presentation. It definitely will lose its value. So inflation can definitely reduce what money can buy. Currency changes can make that loss even way faster than you can even check your bank account, especially in countries like Nigeria. Money depends on government policy. Money depends on central bank decisions. You can receive surplus amounts of money in the economy or restrict that flow based on the policy of the CBN. And that's what they are currently doing. So with all these decisions that are changing the value of money will actually depreciate over time, which means that it's meant for spending and short-term needs, but not for a store of value. Cryptocurrency is like a digital currency designed to work through a computer network that is not reliant on any central authority, just like the dollar or UFC. The first cryptocurrency was actually Bitcoin, released in 2029. And as of April 2025, the cryptocurrency market cap was estimated at $2.76 trillion. But even though cryptocurrency was actually designed to move through computer networks without actually their dependence on a government entity, it is very, very highly sensitive to mood, liquidity, and regulation. A country can ban cryptocurrency and actually restrict that inflow across their borders. The prices can rise, definitely. You can see from the 1-year chart of crypto, which my chairman talked about, the price of crypto actually rose above $400,000. But definitely it has dropped way below $87,000. Imagine you keeping your child's school fees in cryptocurrency because you believed it was a sure hedge for value. That volatility will actually eat up your savings way faster than you can even check. But crypto's role today is very optional, but not foundational. Definitely, it will grow in importance as regulation improves, as infrastructure improves to actually improves the transfer of cryptocurrencies among countries. But it's definitely a high-risk asset. You are not supposed to invest a considerable chunk of your investment assets in cryptocurrency because of its smooth swings and regulation. How about gold? Gold definitely exists outside modern financial systems. It doesn't rely on the government, like the central bank government for fiat. It doesn't rely on electricity networks like Bitcoin. It cannot be printed, it cannot be diluted, it cannot be sanctioned. Its value is recognized internationally. From the times of when Jesus Christ was born down to today, gold has been valued across borders. It is intrinsically valuable. I tell people that gold is intrinsically valuable. That means even without you checking the price, you can actually give someone a gift of gold, making it a valuable store of items, as they did with Jesus Christ during his birth. When currencies weaken, when inflation rises, when trust in policy drops, gold will always hold its values. And that's why the Pension Act, the current Pension Act, as of repealed in September 2025, has increased the options to allow pension fund administrators to actually open themselves up to gold, has used to hedge their inflations. So for cash, what do you tend to use it for? Daily transactions. For cryptocurrency, it's for digital transfer and speculation. While for gold, you should use it as a long-term value protection for you and your family. Cash is best for spending, but gold is best for stability and preservation. And that brings us to the essence of what we are saying today. We are talking about not investing for spending. We are not talking about investing for speed. We are talking about investing for stability. And the best investments you can actually make for stability and preservation is actually gold. The currency risk with cash is very high. The currency risk with crypto is medium to high, but currency risk with low is very low. Gold does not depend on government or technology like cash and crypto, and gold is definitely good for long-term savings. You cannot see the central banks all around the world increasing their crypto holdings, but down to the People's Bank of China, to the Federal Reserve in the United States, down to the Central Bank in Nigeria, all these major bank institutions use gold as part of their inflation strategy. And if the banks are actually using it, you definitely should open yourselves up to using gold as part of your diversification assets. So the simple way to think about it is money helps you live. It's good for spending, it's acceptable, it's convenient. You can bring out a cash from your wallet or a bank account and make a transfer, and definitely to be accepted. Crypto helps you experiment and move value across borders, but gold helps you protect your future. The mistake people actually make is trying to use one for all three purposes. A smart approach, especially for Nigerians, is not choosing each one of them. It's assigning to them their role. You should never keep money as a definite store of value. That is not a good financial decision to make. Gold is definitely your best bet for long-term value and for preservation. Crypto, you can speculate with it. You can try it out. You can use it to move across money, across borders. If you are so bogged down with the currency exchange rates around countries, you can try out crypto and see if it works. But you should not put your investment, your major chunk of your investment portfolio into cryptocurrency, because even if it's going up today and it crosses above $100,000 as it did in previous months, the price volatility will make it go up and come way, way down, as currently it's reflecting in the market order. So how can you better set financial goals with gold? Definitely, as the chairman rightly said, gold is used for a long-term strategy. It's not a speculative bet. It's not a reactionary measure against the government's uncertainty and the economic uncertainty in Nigeria. It's used for your long-term strategy. You should focus on accumulating gold over time and hold it considerably for a long amount of time to constantly benefit of its appreciation. If your goal is retirement planning, holding gold can actually make sure that a portion of your wealth remains insulated from economic downturns. Or you can try out dollar cost averaging. you said, okay, I don't have time to actually schedule how much I want to invest in gold. Definitely, you can allocate that over the course of a week, I'll be investing 100,000 naira into gold. And Dukia Gold has created that option whereby you don't need to stress yourself and bother like, okay, I'm meeting with my financial advisor on Thursday. He needs to send money. Let me buy gold on Friday. I need the account to reflect on Saturday. On Monday, I'll need to have my gold. No, you need to just move past all those processes and use dollar cost averaging to your benefit, because over the course of time, you definitely buy gold way higher than you would have bought if you were constantly scheduling your investments. But using the platform, it can actually make it far more convenient and easy for you to do that. Or you can align gold with your financial purchase. Let's say you want to buy a house, you want to go for college or university, or you want to send your children to school. You can actually align your gold purchase with that financial milestone and set aside the portion that's, okay, this money is going to be used for rent 2026. And for my rent 2026, I will need like, let's say 10 grams of gold to buy that. Let me focus on buying 10 grams of gold over the course of 1 year to align for my rent. That can definitely be done with the Dukia Gold platform. Or you can balance with other financial assets. Definitely, you need to now determine your risk tolerance, consult with your financial advisor. But the essence is to create that opportunity in 2026 to begin to diversify your holdings with gold. Everyone that bought gold at the beginning of the year, at the end of the year, will receive a minimum of 70% increase from the charts and from the discussions had from today. So if you bought gold at the beginning of the year, you definitely get far value of your money during the course of 1, 2, 3, even 4 or 5 years. In that sense, whether you are seeking to hedge against inflation or planning for major financial events, using dollar cost averaging, diversification, or milestone-based goals can help you achieve wealth building success with gold. You should make sure that you regularly review your asset classes, adjust your financial goals, and the platform creates all the other options. You can see how the charts move, how it was yesterday, how it was the day before yesterday, how is it today, how many percentage of your portfolio are actually gained over time. All those little tiny bits that could make you better review your investment portfolio can be done definitely through the Dukia Gold platform. And speaking of the Dukia Gold platform, it's Dukia Gold that's actually presenting this. And we are a leading gold and precious metals reformer in Nigeria and West Africa, offering full service bullion solutions, down from the exploration of gold, to the mining of gold, to the vaulting of gold, to the physical distribution of gold, and down to the holding of gold and trading of gold through our platform. We are involved in each and every part of this processes. We've been doing this since 2019, and we have been featured on every major news channel that you can ever think of. And one of our key assets is adherence to compliance and transparency, based on the fact that we are actually creating an opportunity for Nigerians all over the world, Nigerians and those that are non-Nigerians, to actually begin to diversify in gold. One of our key principles is actually compliance and transparency. That's why we urge everyone that actually want to buy gold from us to actually register on the platform and complete a set of KYC requirements. Well, I've met a lot of people that feel that completing KYC is not really their best alternative. But based on the fact that you are buying gold from an internationally recognized bullion merchant, you need to actually make sure that our processes are documented and you can trust that the gold that we are selling to you is actually legal and ethical. And based on the Ministry of Solid Minerals Development, the OECD, the World Gold Councils, and the LBMA regulations around the world for the sale of investment grade gold, we actually make sure that our platform complies with these other assets. And that's why we have very serious best practices for handling, storing, and securing gold assets around the world. Definitely, the best step to do right now is to go to the website, sign up, enter your personal information, verify your BVN, complete your KYC, and voila, you can begin to now make your purchases in investment grade gold. It's simple, it's easy. I know completing KYC sounds like a big headache because most people have actually been plagued by the banking system where you have to fill out a million forms to open an account. But if you actually do this thing, it will take you less than 5 minutes to actually verify your BVN and KYC. It is that easy. And we don't store your BVN. It's controlled by the Nigerian Interbank Settlement System, which verifies it. We only need your details to approve that the person registering on the platform is actually the person actually buying the gold. All these approvals are done. You can have your gold allocated to you and have best use. It's the Christmas season, so thank you so much for staying with us all through the months of January to December 2025, and for supporting us, for patronizing us, for giving us your feedback, and for just helping us to better improve our platform. Thank you, man. Thank you so much. My name is Emmanuel Waka, and it's time for the Q&A. Thank you very much. If you have any questions or suggestions or deliberations, you can just type it in the chat and we'll definitely review. Thank you. Chairman, sir, you have the floor. Chairman, sir, you have the floor. If you have any questions, please let us know in the chat and I would address them as soon as possible. Oh, I can see a hand raised. Chairman, do you want me to talk about the mining project first or?
Can she type the question?
Okay, ma'am.
Or you, yeah. Or you can just unmute so that she will ask the question.
Okay, ma'am.
Yes. Good afternoon, sir.
Good afternoon, ma'am. How are you doing?
Okay, it's already afternoon. I said, what's the progress on the card? That's the international card that you promised some times ago.
Okay, Ma, do you want to?
Okay. Thank you, Ma. We are still on it. We still had a set of meetings with the bank this week. We were hoping it could be released before this season, but some testing and other activities are still ongoing. So not sure it will be done before end of this year, but we are looking at definitely the first quarter of that year 2026. It should be ready. As Chairman said the last meeting, we will first do a test run, which will be based on some selected people, especially people who have indicated that they are willing to carry out that test. So they will be the pilots. We will use such for the pilot. So if you're also interested, I think you can let us know. We'll put you on the list of the first set of people that would use the card. Thank you, ma'am.
Oh, thank you, Ma. If you have any other questions, you can just let us know in the chat. Or clarification, even if it's Merry Christmas, you can just let us know in the chat.
Yeah. Okay, Emmanuel, I think there are no questions.
Okay.
So,
Okay, Ma. Do you want to like maybe briefly just hint them concerning our mining project?
I believe that we shared that before, and so I'll just quickly talk about it again. So Dukia Gold, as you're all aware, is a mines to markets entity. So we started out trying to be just a refinery and a trading entity, but we discovered that to have sustainable operations, we needed to have our own licenses and get into mining. So we've acquired our own licenses. We have a small scale mining lease and a major mining lease, which is a full scale mining lease. And we have our operations at in Ondo State. So the proposition we have now is for people to do beyond investing in gold as a product, is to also invest in the entity that produces gold. And so we have a private placement. We've had a series of them, and the last set closed in October. But very soon, early in the year, we would have another round of it to raise funds for the development of the mines and also for the mining equipment. We're looking forward to commencing mining operations in the first quarter of next year. And we are the proposition also is to have as many Nigerians as possible to invest in the entity that will be the SPV that we have running the mining operations. And so what we are saying is, let Nigerians also have shares in the company that will be producing the gold. And part of the value that this brings is we all, just like oil, we can say that we are shareholders in NNPC or in a Dangote kind of business. So, and then we can also be, so we get the benefit as Nigerians. We also get benefits in terms of capital appreciation. Your equity continues to appreciate, and you also have access to earn dividends in the entity. So we'll keep you updated on this. In the new year, we'll have a proper presentation that will show you operations and the status of the exploration and mining and what stage we are in, so that it gives you further information that will aid your investments in the company and also the gold one. For the trading, there are also other initiatives that we're bringing on board. I think they've been mentioned before, but definitely in the new year, we'll let you know all what we have on the table so that you can plan and key in into the different aspects of the investments that are available. Thank you, everyone.
Thank you so much, Ma, for that. We talk about the whole mining entity. In the absence of any other questions, I want to definitely appreciate everyone for scheduling out time to actually become part of this presentation, for sticking with us all through the year, for the support. Most of our regular faces, regular customers, we see you, we honor you, we celebrate you, we appreciate you for everything you've done. So thank you so much for being a part of this joyous year. Merry Christmas and see you in 2026. Madam, do you have any final words?
Thank you, everyone. We wish you and your families the best of the season, and we look forward to having you next year. We thank you so much. We can't thank you enough that we're here every month and you join us. It shows us a lot that you have the trust in the products that we offer and also your belief in us. So we will continue to do everything possible to make sure that you get the best from your investments. And Chairman mentioned at the beginning, there was a promise that was made at the last session for people holding up to certain quantities of products in your investment account. You will definitely get a bonus, and this will be advised to everyone that qualifies. Shortly, we'll send you an email, and then you will see that reflects in your account. We thank you so much for your trust, and we thank you for joining us always. We look forward to even a more prosperous year 2026. And for you, we pray and we know that definitely it will be a more rewarding year for you in all aspects. Thank you, everyone. God bless you and enjoy the celebrations. Wish you all the safety and God's favor always. Thank you so much.
Thank you, everyone. Thank you so much for being part of us. Merry Christmas and see you all in 2026. Recording with
Thank you.
2026. 2026.
2026. Yeah. Thank you.
Thank you.
Bye, everyone. Merry Christmas.
Merry Christmas
and Happy New Year.
Happy New Year.